What happened to Australia?
Australia is a country many people call a real paradise on Earth. By sheer luck, everything that powers the global economy lies under its soil. And it's precisely those resources that made Australia into one of the world's most successful nations. But in reality, it's a state that resembles a mine with its own government more than a modern economy. Today, as property prices hit record highs and Australia grows ever more dependent on China, it's clear this country needs to diversify and change course before it's too late. Back in the 19th century, when Europe was fighting over colonies, this distant continent attracted people for one reason: resources. First lead and silver, then copper, and finally, the gold rush. By 1850, Australia was producing nearly 40% of the world's gold. This former penal colony within a few years became one of the main economic centers of the British Empire. Gold more than anything drew in immigrants and gave birth to what Australians now call the pioneer spirit. But like all good fortune, it didn't last long. At the start of the 20th century, it seemed the resources were running out. The authorities even introduced a temporary ban on exporting iron ore, convinced there was hardly any left in the country. But eventually, new deposits were discovered, which made the authorities scrap these restrictions. From that point on, iron ore became Australia's new gold. In 1966, the ban was lifted, and the real mining boom began. Australia realized it was sitting on gigantic deposits of iron ore and coal. On top of that, it became one of the world's biggest petroleum gas exporters. In the 21st century, the world went crazy for steel, driven largely by China's explosive economic growth. And, as it turned out, Australia became almost a perfect provider of most things that China really needed. Over the years, commodity prices rose 5- or 6-fold, and export revenues shot into the stratosphere. In 2021, iron ore alone reached a value of about $160 per ton. As a result, its massive exports became the single most lucrative commodity in Australia's history. But what if all that dependence on iron was a curse in itself? Now, more than half of all profits made by Australian companies comes from the mining sector, even though that sector employs only a few percent of the workforce. That export made only a handful of people fabulously rich, while the rest of the country was left behind. What most Australians ever saw was an ever-deepening hole in the ground and the nation's wealth being shipped overseas. Iron ore turned Australia into a state dependent on a handful of global corporations and Chinese demand. Today, almost 2/3 of Australian exports are raw materials, and most of them go to one country: China. People say Australia is a Western country with a Chinese economy, and there's some truth to that, because although some rankings still paint it as a wealthy paradise, it no longer stands as firmly as it once did.
The iron ore of the Pilbara has built the great cities of China and will continue to do so for decades to come.
Australia earns more from its mines than many countries make from technology or tourism. That in itself doesn't have to be a problem, though it would be far better if that wealth genuinely supported the country and its people. Take Norway, for example, which over the years also built its wealth on resources. Oil and gas are its foundations. But Norwegians understood that such luck never lasts forever, and already in the 1990s they created a sovereign fund for future generations. Today's total value of that fund is about $2 trillion. Oil revenues weren't simply consumed, they were invested all over the world. Australia, however, often seems to have done the opposite. Instead of investing in the future, much of the profit ended up in the pockets of those who were already wealthy. Because while TV talks about the Australian economic boom, in reality, most of that boom never reached ordinary people. Today, nearly 83% of mines in Australia are owned by foreign investors. Of the remaining 17%, half the profits go to people earning over $250,000 a year. On top of that, the richest still get to enjoy tax breaks. In 2022, more than half of all corporate profits in Australia came from the extractive sector, and yet mining paid an effective tax rate of just 14%. By comparison, Norway takes 78% tax from oil. So, Australia not only chose not to invest its mining wealth into a national fund, but it also failed to make that money truly work for the country. And there's more. Because in recent years, it has even started subsidizing them. In 2023, the government allocated over $14 billion in subsidies and tax breaks for the gas sector. Officially, it was done to maintain competitiveness, but in reality, it feels more like a gift to some of the biggest political campaign donors. That's the moment you see the difference between a country that used its luck and one that simply eats it. Norway invests its resource profits in society and prosperity. Australia uses it to please companies that dig ever deeper. You could say Norway thought about its grandchildren, while Australia thought about the next election, which is why, even though both economies started from similar points, today one has a $2 trillion fund for the future, and the other has an ever-growing hole in the ground. For decades, the world envied Australia. Europe and North America were far more battered by wars and financial crises in the past. And on top of that, Australia kept discovering new deposits of valuable resources year after year. But it's worth asking whether Australians still have any real control over the course of their own economy, because they cannot allow their resources to turn them into another Venezuela, a country whose oil became both its blessing and its curse. When a country exports huge quantities of raw materials, its currency strengthens. And when the currency strengthens, everything else struggles to maintain competitiveness. You can see it clearly on this graph. The value of the Australian dollar is influenced largely by the price of iron ore alone. When Australia makes more money from exports, the Australian dollar rises. When it slows down, the dollar falls. That means the entire economy is hooked up to one commodity drip. It means disaster for agriculture and manufacturing. A strong currency makes their goods too expensive to export, and their competitors from other countries simply take over. In 10 years, agriculture could lose over $60 billion in potential export revenue because of that. On top of that, factories that in the 1990s still competed globally have practically disappeared by now. Australia once made cars, now produces none at all. Toyota, Ford, and even Holden closed their factories in Australia over the last decade. But even where innovation did appear, Australia couldn't keep it. This is where some of the world's best battery technologies were developed, where hearing implant improvements and advanced energy storage software were created. And yet most Australian startups flee to the United States. Simply because it's easier to find investors there, because there the dollar doesn't depend on the price of iron ore. As a result, Australia has one of the least diversified economies in the developed world. According to the Economic Complexity Index, it ranks 105th globally, between Botswana and Ivory Coast, lower than almost every OECD country. It gives a really interesting perspective. A country with such a high GDP per capita has an export structure that looks more like that of an early-stage developing economy. Australia became rich because someone else became even richer. And if the demand starts to slow down, Australians' revenues shrink. On paper, Australia looks like one of the best places to live. A high GDP per capita, one of the highest minimum wages in the world. And on top of that, there's low unemployment and excellent healthcare. But if you ask Australians how living there really feels like for them, you'll hear one thing more and more often: it's expensive. In just a few years, life in Australia has changed dramatically. House prices and food costs are soaring, while real incomes are either stagnating or falling. In theory, the economy is still growing, but only because the population is growing. GDP per capita has been declining for 4 consecutive quarters. At the same time, real wages are about 10% lower than before the pandemic, and house prices higher than ever.
The average Australian needs to earn $130,000 annually to afford rent without any financial strain.
Well, it looks like Sydney is now the most expensive, least affordable city on the planet.
In Sydney or Melbourne, the price-to-income ratio for houses is now around 10-to-1. That's one of the highest in the world, and it's no accident. The tax system rewards those who buy houses as investments, rarely those who want to live in them. The mechanism known as negative gearing lets wealthier investors deduct rental losses from tax. And, as a result, for many Australians, owning a home has become a luxury good. People once said every Australian had a house with a garden. Today, that's increasingly true only for those who bought it 20 years ago. The young generation enters adulthood with record household debt, because Australia has the second highest household debt level in the world. The government introduced new policies to tackle the crisis, but instead of bringing property prices down, it began subsidizing purchases through grants, tax breaks, and top-ups for first-time buyers. And all of this simply pushed more money back into the market, driving prices even higher. Australia has built a perfect vicious circle. The paradox is that the country is richer than ever, yet fewer and fewer people actually feel rich. Because in Australia, almost everything costs more than it should. And while it's still one of the best places to live, fewer and fewer people can afford that life. Here's the crux. Everyday high costs don't appear out of nowhere. If the entire economy is tied to a single raw material buyer and a single iron ore price cycle, then whenever the world slows down, Australia slows down with it. When resource demand weakens and companies halt investment, the currency and interest rates do the rest. On paper, Australia is one of America's closest allies. After all, it is Western militarily, culturally, and politically. But economically, it lives in a completely different reality. Because like I said earlier, its economy hangs on a single country, and that country is China. China buys most of Australia's iron ore, coal, gas, and rare earth metals. It has actually become quite normal for a third of all Australian exports to go there. That demand kept Australia afloat for years. But dependence on a single economy is never safe, especially when that economy weaponizes trade. In 2020, after a political dispute over an investigation into the origins of the pandemic, Beijing imposed restrictions on Australian coal. It wasn't a devastating blow, but it still cost Australian companies millions. And coal wasn't the only sector hit with Chinese restrictions at the time. It was the first warning sign. If China catches a cold, Australia gets pneumonia. Despite this, the country cannot break free. 80% of iron ore, which is the main pillar of exports, goes straight to China.
Australia has repeatedly rejected investment by Chinese enterprises and has carried out searches on Chinese journalists. The Australian side claims that it is China that breaks the rules, while it itself unscrupulously tears up cooperation agreements between China and Australia and freely undermines normal contacts and cooperation between our countries. We hope that the Australian side will view China and its development in an objective and rational manner.
This means the Chinese economy controls more than just the market. It effectively controls Australia's GDP. It's a situation that's hard to reverse. When you've spent 2 decades building your strength around a single client, any move that might upset that client means lower profits. And now it even means a political risk. Australian politicians know this, so at conferences they talk about partnership with the US and at the same time quietly sign new contracts with Chinese conglomerates. And that's another of Australia's paradoxes. A culturally Western nation that can't function without the East. Some like to call it a strategic balance, but in reality, it's pure dependence. An economic leash that's no longer easy to slip. Yet Australia didn't have to end up as the world's mine. It had all the cards: stable institutions, an educated population, huge export profits, and decades of peace. It was the perfect moment to build something lasting. And that's when the biggest mistake was made. They assumed the boom would never end. Instead of investing billions in research, technology, and industry, mining profits dissolved into consumption, real estate, and handouts. Politicians avoided hard decisions. They didn't want to raise taxes on extraction or create an investment fund like Norway's. It was a classic politics of luck scenario. As long as the money flows, no one asks what happens tomorrow. And it could have been different. Australia could have developed its own semiconductor industry just as the Netherlands did. It might even have become a major technological hub, which is safely distant from any modern military conflicts. Australia could have used its wealth to build a modern manufacturing base. Instead of exporting iron ore, it could have produced steel and components. Instead of shipping gas, it could have invested in renewables and energy storage technologies. Instead of gifts for developers, it could have created a science and industry development fund. Maybe it could have supported local startups through a Chaebol approach, just like South Korea did. Although this approach has its flaws, South Korean companies still stand strong on global markets. The knowledge and technology were there. Australian universities created world-class innovations, from hearing implants to Wi-Fi technology, but most of these inventions were sold abroad because there was no system to keep them at home. As a result, Australia really did turn into a mine with its own government. Had even a fraction of iron ore profits been channeled into an investment fund, today Australia could have had hundreds of billions in reserves and one of the most innovative economies on Earth. But sadly now it has soaring house prices and dependence on Chinese demand. Because it's not resources that make a country rich. Wealth depends on what you do with them. Australia is called the lucky country, but what if that luck is running out now? And when it eventually runs out, you need something more than just mine fields. You have to build your own future instead of selling it overseas again and again. Every ship sailing to China is a symbol of a missed opportunity. And it could have been done differently. Just look at the country on the other side of the world, Norway. They also had a moment of luck, but instead of consuming their wealth, they invested it in the future. You can learn more about it in the video currently displayed on your screen.